consumer goods. That's the phrase on the NGX. And that's what we're talking about today because, hey, when you go to the supermarket and you try to buy stuff, you best know that you're buying a company. You're buying the vision of a company. Whether you're buying your detergent or you're buying beverages or whatever it is you're buying, you know that you're helping the balance sheet of a particular company. And what that means is that gesture of yours in the supermarket impacts what happens in the capital market on the NGX. And lots of companies in the consumer good index. Ladies and gentlemen, you're very much welcome to In Good Company. Here we talk about companies, especially public companies, companies that end with PLC. You see them in our stock market and you see them on the NGX. My name is Frank, and I've got some gentlemen with me on this episode. But then, before you get to know our guest for today, I have a... what do I love to call you? I've forgotten what I call you, but I'm going to remember right now. City gentleman. Sitting with me, Idika Aja. Amazing, phenomenal gentleman. A city gentleman in the market. He's a walking balance sheet. Ask him about any number, about any company's number, and you're just gonna get the answer in a split of a second. Idika Aja, you're very much welcome to this episode of In Good Company.
Thank you very much, Frank, and good afternoon, everyone.
Okay, so sitting right on our famous couch is a gentleman. When I say gentleman, he understands the numbers. He understands how to crunch these numbers, but not just the numbers, but also the insight behind the numbers. Because it's one thing for you to understand the numbers behind these companies. If you look at what has happened with consumer good index, it's done 52% year to date. And if you look at that, that is amazing. Apart from consumer index doing 52%, it's the best performing index as we speak. It beats the likes of the banking index, it beats the likes of insurance index and some other index. That gives you an idea of how the market is performing at this point in time and the sentiments in the market. Now, joining me to have this conversation as regards the consumer index, we have no other person but Abdulsalam Ayoade, who's the team lead research at Stevens Asset Management. You're very much welcome.
Good afternoon,
Frank.
Thank you for having me.
Okay. So look at what has happened. 52%. Idika Aja. Everything is just this index is doing amazing numbers. Let me ask you, what you have to say, Idika, about what is happening right now?
Yes, the consumer goods index has been doing very well this year, but I think we have to look at the components, the stocks that are driving the index.
Yeah,
I think. We have about 20 of them listed, and they have done quite well.
Yeah,
I think right now you have Honeywell that is driving the
index.
The index. I think with about 313% year to date. You have Cadbury, you have Boa, you have Champion Breweries, you have Nigerian Breweries. They have done quite well, and they are the people, those stocks that are driving the index.
So, Mr. Abdulsalam, what do you think is the sentiment behind this move? What is really behind the consumer index rally in from year to date? It's amazing numbers, if you ask me. So, what do you think is the reason behind that?
Thank you for that question. I would say it's a blend of earnings to date, which is basically the Q1 numbers, and also market sentiment. Basically, a lot of these companies have posted a very strong performance in a strong profitability performance in their Q1 figures. And also, we know a lot of retail investors, they just go with positive momentum in the market. So I think it's a blend of both earnings figures and just market sentiment. So
I understand earning figures, but if you look at the companies, we have about 20 companies under this index. Which of them really appealed to you as a researcher from your point of view?
I'd say Nestle, Nigeria PLC, because recovering from last year loss now to a very strong profitability. I'd say it has been a lot of price adjustment. There has been a lot of price adjustment a lot of bringing in new strategies like exporting. So it has been a mixture of both. So I'd say Nestle, I'd say PZ Kusin, because as at last year we were thinking they were going to leave the market. So now, because they had like a lot of profitability issues, we had news of the group saying they want to demerger the African segment. So there's been a mixture of both. So I'll also say Unilever. I've seen a lot of growth in their food segment. That has also been the driver for their profitability. Also,
before we take another question, I think to add to what he said on one of the reasons driving the growth, you look at the valuation re-rating. That means not only on earnings, because investors are now thinking, okay, fine, we believe that these companies will be able to sustain the growth recorded in Q1. So that means they are revaluing their position, saying, okay, not necessarily that earnings have gone up, but because they believe that they are worth more than what they are right now. So it's another reason why you are seeing that growth.
Do you think that was a factor of what happened from macro point of view because of the, we had CPI rebasing, was it early this year or late last year?
Early this year.
So we had CPI rebasing, and that affected a lot of industries. Like before, the number one industry never used to be real estate. It used to be oil and gas or something along that line. But we saw real estate coming on top. So imagine those companies in real. But I'm saying that there's a lot of revaluation that has happened in so many industries from a macro point of view. Do you think that also was a factor that made them reevaluate their assets and their worth?
It's not as if that they are revaluing their assets. What I'm saying is that because on the side of investors are saying, okay, fine, you've done very well in Q1, based on the number, because in 2024, I think the most fancied companies in that sector, looking at Boa Food, Honeywell, not even Honeywell, Boa Food, Dangote Cement, Dangote Sugar, Nigerian Breweries, International Breweries, all of them. It's only about two of them that declared their profits in 2024, where you have, I think, Boa Food and NASCON, and about three of them and Champion Breweries. Now, coming to Q1, I think it's only Dangote Sugar that declared a loss among the 9 top companies there. Now, because of that, investors are saying, okay, fine, we believe that maybe Q2 might be better. So they are now pricing in everything. So that's what I mean by valuation re-rating.
Okay. So let us take a look at earnings. And if you look at their earnings and margins, which of the companies in this index do you think had a sustainable turnaround? You mentioned Nestle, and which other company do you think had this sustainable turnaround as regards their earnings and as regards their margins?
I said PZ Kusin before, and then also Unilever. So I think what has been going around those companies has been around managing their cost. So a lot of them are looking into sourcing of their inputs internally, locally, having strategic partnership with farmers, and so as to just reduce the cost. And also they've been going into a lot of advanced payment for inputs.
The market is a marathon. That's how I see the market.
Yeah.
And if you're doing amazing numbers,
there's something I want to add there. Yes, they have been able to manage their cost, but if you look at the 2024 financials and look at Q1, there is one significant factor in all this, and that is foreign exchange volatility. And
our FX.
The FX. Now, in 2024, most of them declared FX losses. Coming to Q1, I think the thing came down from 496 billion to 4.6 billion. That really impacted their bottom line.
Very true.
And about 9 of them from 469 billion FX loss to 4.6 billion. So you can see the impacts. So that really affected them and improved their bottom line.
I'll speak to Nigerian breweries.
Okay, please do.
So as at last year, they had a lot of their financial liabilities increased. So around the closing of the last year to the early this year, we saw a lot of coming into the market, right issues, and they've been able to raise about 599 billion to clear to cancel out the effect of financial liability.
599 billion.
Yes.
Whoa. That's really impressive. But how sustainable is this? Because we're still in H1. We're in H2, by the way, but we're just on the start of H2. A lot of this company, look at the index has done 52%. Do you think it's sustainable towards the end of the year? And how sustainable do you think it is going into the end of the year?
Okay, so we look at what has been driving H1.
Yeah.
And we'll also see, okay, is this going to also be able to move into H2?
What drove H1?
Exactly. So FX gains.
FX gains.
Yeah, we saw a little bit of stability in foreign exchange.
Yeah, actually.
So a lot of them had lesser finance costs from foreign. So, and I spoke about Nigerian breweries. They had to let go of a lot of financial liabilities that are foreign based. I'll speak to CPI also. We've seen the interest rates.
That's the consumer price index. Yeah.
Consumer price index. We've seen a lot of conversations around interest rates. So is there going to be a cut? Now we are seeing inflation figures coming down. So the impact on this consumer goods sector and these companies in consumer goods sector. So basically in H2, what should we expect from these companies? So as we are seeing a downward slope of the inflationary figures, we should also note that closing this year, we should see MPR rates cutting by around 50 to 100 basis points. So that will also reduce the finance cost of those companies.
Perfectly. But I agree with him on the inflation. But if you look at it very well, the inflation rate is down, I think 22.22%.
Yeah, but then
but
is it the new?
Yeah,
let's put it in context.
Yeah, that is where I'm going.
Okay,
the thing has come down to I think 22.22 from 22.97
under the new the rebased.
That is June. That is June.
Okay,
but actually, I think what has been driving them is price mechanism. Most of them have been relying on price increases, moving up their price, and it's not really as that maybe the consumer behavior or the consumer power has really increased to drive them. But I think most of the things that's the things that have been driving them.
Yeah.
Are basically
price
led. Yes.
But I just have a feeling, not a feeling, it's factual. We're seeing it in the markets. Go ask anybody. You see consumer goods, they've been able to handle inflation gracefully. Why? Because if you look at what happens in the markets, there's a way shrinkflation, that's what we even call it, where they sachetize everything. We understand that the purchasing power of people is depleting by the day, but they have a way of meeting the masses where they are. I don't know if you get my point.
Yes.
So if you're buying like say a 250 grams of milk, if a poor person can afford that, then they would give you a product that will fit your own budget. So they still have a way of driving sales in the midst of inflation.
Yeah. Somehow you are right, but the bottom line is to check the volume, their production, the volume. You understand?
Yes.
It's not only about they have repackaged their products, reduced to what you can afford. But the most important thing is to look at the volume. And if you look at their financial, you see that the volume has not really increased. But what is actually driving the revenue is the price.
Yes. So do you think there's a real recovery from the real economy, inflation, to be able to drive their volume? Do you think we'll recover, especially the index? Do you think we'll recover and to beat inflation, to increase our volume and people purchase more of their products?
I'll say to inflation, if we attain what the federal government is telling us, they want to achieve 15% inflation. So, like I said before, if
For how long? I think they said this year. Before the end of this year.
before the end of
And
this
we
year.
have hit. Okay, let's watch.
So we are currently at 22.22. So if we're able to beat down inflation to a certain level, we will be able to see finance costs coming down. Be able to see lesser prices for these commodities,
Yeah.
increase the volume. Because what we are seeing now is price led, it's not sales led. So a lot of not volume led.
Yeah.
So a lot of consumers, as at last year, what was affecting them was basically inflation and also the wage stagnation. So basically, you're not seeing increase in their wealth, in their disposable income, but the prices of goods and services are going up.
Yeah.
So now what they result to? They result to smaller sachet of these commodities.
Very
other
true.
than the rest. So it's basically they are not increasing, but they are still consuming.
I remember one of my favorite biscuit then. I used to buy when I was small. Guess how much? I think he was 5 naira or so, less than
Costa?
that. Why did you mention the brand?
Because
But I get your point.
I remember
and
buying
it was like
Costa at
it
that
was
price.
like you see like 8 or almost 10 inside it. You can use it for lunch, breakfast, and dinner. But now I saw it recently, and it's like 3 or 4, and I'm like, whoa. You can't blame them because obviously they're trying to meet the consumers where they are and also keep up and cut down on their cost and just money. It's so tough, that industry. It's so tough. But what do you think is going to be what's your prediction for the next 6 months? What do you think? Do you think they're still going to be leading? They're still going to be the leading index going into the end of the year?
I believe so. If they
Why?
continue with the momentum
Do you
that they're
believe they'll
going.
beat banking?
I mean, the
Idika,
index,
do you believe
the-
yes?
the index-
Yes.
I-
Do you think
I
you
believe
believe
so.
they'll beat banking?
I believe if you look at the performance so far,
51%.
I think they are, apart from the index,
Yeah.
they have about 20, like I
52
said,
rather.
20, and out of that 29 have returned triple-digit year-to-date growth.
Oh wow, amazing.
Then 15 of them have a return above inflation rate. So it means that because the essence is to give investors the information they need.
Very true.
That means that investors holding shares, at least they have real return.
Yeah.
Because the return, those assets are more than inflation rate, which is at 22. So about 15 of them have a year-to-date return more than 22%, which is good. Now going into H2,
Yeah.
yes, but it's equally important to note for investors to note if you look at their price multiples, they are not cheap. They are expensive, which is very, very important. So while you are investing, you have to be very, very cautious because they are not cheap. They are expensive. Looking at their earning multiples,
Yeah, true.
that is their price multiples,
Yeah.
price to earning ratio, price to book ratio, and price to sales ratio. On average, they have a price to earning ratio of 31x. That means for every 1 naira of earning, you are paying 31
That's one
naira.
Yeah.
And it can even take you, that means alternatively, it can take you about 31
Yes.
years to recover what you have invested. That is the meaning of private earning ratio of 31x. The same thing with price to book, because none of them is trading below their book value.
Yeah, true.
So you have, that means an average 6 point, that's average 7. 7 times, they are trading 7 times their net book value. So that makes the stock very, very
Pricey.
expensive.
Yeah, premium.
So it's a premium valuation.
Yeah.
So, but and equally, what is equally saying that, okay, we believe, investors are saying, we believe that you can do better going into H2.
Going into H2, let's even leave H2 self. Let's talk about now. Which of the companies do you think stood out for you, and which of the companies do you think still offer value? And what should investors? Which of them should investors approach with caution?
No, that's interesting.
Yeah.
I'd say with value, I would say I mentioned Nestle.
Be very
before.
objective.
Yeah.
Be very objective. I know. Be very objective.
Yeah. So I'll say Nestle.
Yeah.
From last year, they were recording around their stock was trading around 600. Now it's trading around 1,006 around that range.
And I think 1,650
Yes.
as of yesterday. I think so.
So and these are companies with strong fundamentals. They're not just coming to make profit this year, no profit last year, except for
They stood the test of time.
Yes, they stood the test of time. So it's basically what affected them last year was because of the FX devaluation and the inflationary figures, the hike in PMS and diesel prices. So I would say Nestle, I would say Unilever. I would still expect a little bit more from PZ Cuisine.
Yeah.
But I would say our caution should be around the breweries, international breweries. Even though they posted profits in their Q1,
Yeah.
their losses from past period are still driving down. Yes, also driving down their profitability. So I would say the same for NASCON. Also, their margin is very thin. So I won't really advise investors to go into.
Yeah.
So aside that, I'll also say the Cadbury.
Okay.
They are also still facing a lot of FX volatility, and so I'll say those stocks.
Well,
It's an industry that is very competitive.
I differ a bit
Okay.
on that. I think for me, I will go for Boa Foods.
Bra Foods. Okay.
Yes. After that, I will look at NASCON.
He mentioned NASCON.
Yeah, NASCON, because Boa Food has been consistent. In 20,
I think they even won an award from us.
Yeah, in 2024.
FMCG
I think,
Company of the Year.
Only among them, the only one of the companies that declared a profit in 2024.
Yeah.
And the margins, the profit margin has increased this year. So, and equally, it's a dividend paying stock.
Yeah.
I always like
You will love dividend paying.
for income oriented investors.
Yeah,
at
true.
least, Nigerian Brewery didn't pay dividend last year because of their loss
losses,
position.
Yeah.
The same thing with international. I don't think
they
didn't. And they say it's only among the breweries, only champion breweries that made profit in 2024. So for me, I will go for Boa. Look at NASCON. My caution goes to Dangote Sugar.
Why?
Because
Do we have more competition?
I think for the past 5 years, you can agree with, you can confirm that for the past years they have been on loss position, and I think it's only in Q1 they returned to profitability, and I still have to watch them.
Also, they've been having like an increase in capex, in capital expenditure. So they're trying to create a new refinery in Nasarawa. So it has been affecting their balance sheet. So.
Yeah. But in terms of valuation, I think Nestle has the highest price to earning ratio.
Yes.
I think about 158, which is very, very high. Very high. But let's see what happens. Maybe that the stock is overvalued, or that investors are saying we believe that you are going to earn more.
The index, buy, sell, hold. What are you buying? What are you selling? What are you holding?
How can you ask me what I'm holding? You are seeing the index that is the best, the best performing index.
Okay.
Of course, I will buy it. It's a buy for me.
It's a buy for you. How about you?
Yeah, I'll go with him.
Okay, so the industry is so competitive, and sometimes we look at it. I understand your point. You look at it from with their numbers and look at their FX exposure and all that, but at the same time, we don't also look at it from competitive standpoint, because there's a lot of competition in the market. If you look at some of these FMCG products on the shelves, you're seeing beverages, another competitor is coming on board. Nestle has a competitor, new competitor. So there are lots of competition, and now it's a price war. Consumers will go for what is cheaper. And so what do you have to say regarding that? Don't you think that also has a part to play in their numbers and their earnings?
The consumers are looking for what is cheap. What is cheap? Well, the ones that are cheaper.
Yeah, in the high inflationary.
But I think for me, the take is if their disposable income will go up, that will equally help the consumer goods sector, because what we have seen so far is a sector driven by price. So, and especially those what do I call it? Those essential goods that you cannot do without. So you must buy only that. You cut down your budget. So now the inflation is coming down. We would have loved a situation where maybe as we enter into Q2, where you have at least the disposable income will increase and inflation will come down. Now the FX is stabilizing. So I think that is a key thing. If the disposable income can increase, of consumers can increase, that will now equally help them. So they don't rely more on price adjustment to improve or increase their revenue.
So you've heard from our C2 gentleman, Idika Aja, he's told you about the stocks to look out for. He mentioned NASCO. You also mentioned Boa Foods, and he said stay clear. Make sure be a little bit cautious when you're taking a look at Dangote Sugar. I don't know whether he has a personal issue with Dangote, but he says stay watch, because he's not too sure with their numbers. They've been consistently on a loss. And so when you're investing, make sure you invest wisely and use this information for investment purposes only, for information purposes only. Don't just go into the market without doing proper research. And you've also heard from our guest, Abdulsalam Ayoade, who's the team lead research out of Stevens Asset Management. He said that Nestle, take a look at Nestle, because they've done amazing numbers and they've been able to come back from their days of losses. And also, he said you should take a look at NASCO. Really, just take a look at these companies and do your own research before investing. And that's it here on this episode of In Good Company. We'll see you some other time. Make sure you keep liking, keep sharing, and keep watching, using the platform, using the content to do your research. Who knows? You just might end up becoming the next investor billionaire from the NGX. I'll see you on the next episode. Cheers.